The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, I'm a little under the weather today, folks. I've got a migraine, plus I've got an allergy. For some reason, they never bloom in January, but two of the trees outside the house here started blooming because of the warm weather we had. Here's the Treasury bonds. This was the 786 on the long-term weekly that we pointed out. The risk there was very, very small. Where the number we were looking at was 111.16. It got to 111.13. Now we've rallied quite a bit. Now we're going to move this to a smaller time frame so we can see the action intraday. So there was your action intraday when you first bought it. Then you had your first pullback. Here was your first rally. You went up a little over $600. And then look what happened. Well, it's a little more than 382. I can tell you that right now, but it went to the 50%. There's 3 pips difference between here. This tells us that a minimum objective would be right up here, which would be $1,000 on that trade. So you'd have your stop right below here right now, locking in at least 300. And if the trading gods are with you, which she usually, well, this is not drawn correctly. Let's just move this over here right now, and you'll see where we have it up here. Should get right up there, which would be $1,000 profit on the day. Now, remember, if you're day trading, and that's what you're supposed to be doing, this is all about risk control. That's when I try to post these to you. I try to give you what I think are the best patterns to look at with the least amount of risk. If you remember, yesterday we were talking about the soybean meal, and that's not it, Larry. Let's get the soybean meal, which is right here. We're going to bring it up here. And we were looking at the soybean meal, and you can see the magical level of this number that everybody loves but nobody uses. And that's A, B equals CD, and that came in at $299. We are now $370 higher. Your stop now would be at break even, so you would have no risk at all on this trade. That's the ideal situation, but there was the ABCD yesterday. Here's how it's acting today. They don't always work that way, folks. ABCD patterns work about 65% of the time. So most of the time, what you're going to be doing is protecting your backside, and that's what this thing is all about. Okay? Just keep that in mind. Now, we're going to switch over. We're going to talk about one of the markets we've been watching for quite a while, which has been that live cattle market. We'll get that up here. You can see here, this is the daily. Let's get this up here on a smaller time frame, so we can see where we were. There was that top we were looking up there at 96. You can see now we're trading 2 handles below that. Right now we got to 93.60. If we look at this on a really small scale, this is today's action. Okay, there was your high earlier in the morning. You still sold it at 96. Now it's down 2 full points. And it's tried to make a 382 retracement here, but it's missed it so far, but it still could get there without too much trouble in the cattle. By the way, the lead option cattle will be changing between February. Try using words, Larry. The option, the futures contract will be switching from February to the April contract, which will be the lead contract here in a day or two. Right now, it's still Feb, but this is coming up to be the secondary one, to be watching. Okay, now we'll move this out of the way here, take care of that, and then we come over here. Excuse me, folks. Doggone. Wow. All right, let's move on to the next one we want to look at. We've already covered the Russell, we've covered the bonds, we've covered the meal. Now we have to cover the crude oil, because that was another one we were looking at yesterday. You remember saying watch for the 382. So all I'm going to do is I'm going to bring this up. Now this is just a 4-minute chart. There's yesterday's action. So all we're going to do now is you can see what's happened today. On today's action, you can see we had the high right here. You came in, it went above the 382 by a little bit, but you wouldn't have been stopped out. Your stop was here. And then as you went down, you had several other chances. If you looked at the last high that you had right back here, from that one, Came right in at the 382. 74, that's a $1,100 move, folks. That's a good move without risking very much. That's the key. But let's look at this on a smaller or a little larger time frame, because you had a beautiful one here this morning. That's the one we were just talking about. But last night, you can see the high today. There was the action from Tuesday. There's the action starting today. A high was made there at 75.30. All right. Now, if you remember, looking back on the daily chart, we were watching for a number to come up here at that same level. Now, what we did is we took that high out by just a little bit. But as it did that, let's get back here and take a quick look at it. As it did it, you can see here, move this over just a little bit. There's the low that we had, and there's the high that we had. So if we drew that in, you'll see that what you'd be looking for would be, guess what number that is, boys and girls? A 1.618 extension with none other than right after the alphabet, A, B, C, D, E, F, G, H, I, J, K. Aren't you so proud of me? Anyway, that's what we're watching. So that's what I try to do for a living. Today's been a rough day because I am, for some reason, folks, I am just absolutely worn out. I made a couple of trading errors, nothing to be significant about. I've had a relatively good day trading, but boy, I've just been exhausted. I was thinking of canceling the show today, but I didn't want to do that because we're at such critical times here that we really have to pay attention. Here was one that sort of perked me up just a little bit before we came on the air, was in the gold market. I was looking for that same pattern in the gold. You can see here, this was the action from early this morning. You can see the ABCD swings that were all through here. I'll draw a few of them in because there really were wild ones. You're talking about $1,000 in between all of these swings. And then you start up and you finally, when you get ready to make this a high, which usually around noon in the US, the gold, you see what you were doing at that point. You were making a nice little butterfly pattern right up there at that level at 2686, and then it's come down, and look what it's doing right now, folks. As we're on the air right now, what we just do, we went just a little above the 382 to the 50%, and now we're below it. So if you'd have sold it at 73, your stop would be up here at about 77. So your risk would be $4 on somebody that trades for a little over $250,000, $267,200 for 100 ounces of gold. All right, boys and girls, we'll be right back, hopefully.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Okay, folks, someone's asked me a question about why do these Fibonacci numbers work the way they do and these patterns work the way they do. Folks, that's right. What time? We got enough time to do this. Actually, you don't, well, you got to do the work, as Twentyman said, but let me come up here and show you the reason why this stuff works, okay? Get back here. Yeah, where do we want here? Where is the darn thing? Shucks. This is it right here. Hold on just a minute and I'll get up here and we'll take a quick look at it. This is worth the price of admission, folks. This is a sum total of all of my stuff that I've done through the years. What we're going to do now is we're going to do the slideshow and we're going to do it from the beginning. This takes a few minutes, okay? All right, that's me, all right? Here's what we're going to be talking about. Bada bing, bada boom. That was me about 71 years ago. Not quite that long, but about 8 years. I still look the same. I've lost a little weight, which is good. Simplicity beats complexity. That's what I focus on, folks. I don't use oscillators. I don't use momentum. I don't use oversold, overbought, biddly-bop, biddly-boo. Nothing. I don't do any of that stuff. I just look at A, B, C, D, and sometimes a little volume, but not very often. Back in the early 50s and 60s and 70s, the book on Wall Street that counted was A Random Walk Down Wall Street by Burton Malkiel. He was a nice young fellow, and he's still alive, actually. He's like 96, I think. And he wrote this book that under scientific scrutiny, chart reading must share a pedestal with alchemy, the magicians. But in 2000, Andrew Lowe of MIT came out with a book called, well, a paper. It was on April the 17th, the birthday of Arch Crawford and also J.P. Morgan. And it said, this alchemy can yield pure gold. And what he did was they looked at 800,000 patterns over a 38-year period of all different kinds. Higher tops, higher bottoms, head and shoulders, triangles, all these different patterns, and they categorized them. And after all this stuff, their book came out, about a year later. The 700 pages said, yes, these markets are predictable within limits, but the main thing is they repeat over and over and over and over again, and that's what we try to do here, is preparation. Mandelbrot, he brought the people interested, he was the father of fractal analysis. This was back in the 80s that he brought this book out. Fractal analysis said that all the little patterns, no matter what they are, start with the seed pattern. And if you knew what that seed pattern was, you'd have a pretty good idea. He's telling you like this, markets are fractal if you only knew what the seed was. Well, Mandelbrot called it the lightning bolt. I call it the ABCD, just like Gartley did in his book of 1937. There's a 53-year difference between 1980 and 1937, but Gartley was doing this in 1937. There was it right out of his book, page 249. That was your market moves up. You have an uptrend, you have higher tops, higher bottoms. In a downtrend, you have lower tops and lower bottoms. And the key takeaway from what you do, or what I do with all you folks, is I added a few things called Fibonacci numbers on expansions and contraction. This is a contraction, this is an expansion. Okay, and that's what they're all geometrically related. That comes from Bryce Gilmore and a bunch of other smart guys along the way. This proves how this works, folks. This is the euro over a 10-day period. All right, you can see there's no patterns here. Clicking in, you can see all the patterns there and all the ratios. The most actively traded thing in the world. It doesn't trade. It doesn't change. It's still doing the same thing it was, 8 years ago when I did this program, 6 years ago. All right, now here's what happens is, how does this work? Well, here's the euro on a daily basis. You look at this, say, well, I don't see any of that stuff here. Well, all you have to do is defy human nature, like Twentyman said, and put the patterns in, and you can see them. There they are. And I didn't draw all of them in. There's others in here, but I just drew the ones that were real easy. So that's what I'm trying to show you here. There they are, right there. And then there they are again on a 30-minute chart. Same way they are today. Okay, there's the British pound, same way it is today, only the British pound's trading at 123, not 124. But anyway, that's what we're watching here. And that was basic of everything. It didn't even take 10 minutes to do that. Let's get this out of the way here. And that's the stuff that I do when we did the Flow Traders Handbook, to go through and look at these patterns to see that when they do pop up, they have a pretty good idea of what we're trying to do. So when you see these ABCD patterns on a smaller time frame, like we did in the Dow Jones this morning and some of these others, all that's doing is giving you a nice little place to be a buyer or seller. That's all it's trying to do. Nothing more, nothing less. Okay, that's what we're looking at. Now, since we're talking about a little bit about the British pound, let's get it up here, because I think this is going to be a big trade when it happens. Here's where we are today. Here, you can see we've been coming down. If you remember yesterday, we were talking about this. This is just about the time, about 20 years ago, it was January the 8th, I think about 15 years ago. Our congresswoman was shot here about 3 miles from me at the Safeway store. They were having some type of a get-together, and a young man shot her in the head with a Glock. And the bullet, instead of going into her brain, went around, caught the skin underneath her brain, and took it around and popped out the top of her head. So she had brain damage, but nothing that killed her. She still doesn't function too well, but she married the Senator Mark Kelly. Well, they were married before that, but anyway, that's where that happened, was on January. I could hear the gunfire. There's about 9 or 10 shots. I knew something happened, but I didn't know what it was till a few hours later. Now let's look at the British pound on a long-term basis. We've looked at this many times, but we've got to be prepared for it. This is a daily. As you can see, we're making new lows down here. We're below the 123. But the key level here, as we look at the weekly, this is going to be a really interesting trade, folks. This is about as perfect as you can possibly get. The number that we're looking at right here is 122.58. Now, I've got this marked as 123 because I want to know when it starts trading below 123, what's going to happen. So that's why I've got that limit minder in there to say, okay, now I want to watch and see. But what's interesting about this, and if you like time and price together, I'm going to do it again, because repetition is the mother of knowledge. If you move over here, it's also the father of invention. That was 12 weeks down in that run right there. And if you come over here and mark it again and go from the high right back here, move this over, we're in the 13th week right now. So we are ready to reach this level right in here, right now. Now, what we need to do now, since we have this big weekly pattern right here from November, what we're going to do now is we're going to go to the daily, and we're going to verify that number we're looking at is going to be a good number, because there's the daily. See that big rally we had right here? So what we're going to do now is we're going to measure the swing to the downside. There's your 1-6 weight on the other one, so we know that was a good one. You come up and mark it right there, and you'll see that there, boy, this is getting real close, folks. There it is right there, 12686. So that's where I was going to be buying that puppy. Just if I'm willing to buy the bonds at that price, I got to buy the British pound, because it's the same pattern. 10-4-877-927-6648.
spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archive live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
We're going to look at this British pound because this is a pretty big pattern that's happening here. We're going to go back to our last low back here on 29th of October. That had a nice little 5-day rally, and now you can see that we're getting right down here. There's a number you want to be looking at, just right below 123. If you believe in these numbers and all this other stuff, you got to be a buyer right there. Give it a little bit. So the low here has been 123.20. So another 40 pips lower. Let's say there's what my order is, 122.80. So I'm going to put that in here right there. Let's write that in. I'm putting in at 122.90 is where I'm going to be buying it, and I've got a risk of full point, so I'm going to put that in there. I'll probably change that a little bit, but 121.9, that's $600. But if it's correct, you're risking $600. And the last rally here went 4. Okay, 4 points. Now that's off of this high. Now 4 points is 2,400. So I'm risking 600 to make 2,400. Now That's a very good risk reward. That's a 4-bagger. When you trade ABCD patterns, and that was covered in the Floor Traders Handbook and stuff, you're going to win about 62% of the time. If you did 100 trades, you'll win in about 60. Okay, on about 20 of them, you're going to 15 to 20, you're going to either lose or break even. Okay, and the others you're going to break even. In other words, the market went up, gave you some profit, but didn't complete the profit. The minimum profit on an ABCD trade is 1 to 1. So if you stop and think, if you do 60 trades out of 100, and you're making, say, $500 on every trade, you made $30,000. Okay, now some of them are going to lose. 20% of them are going to lose. So 20% into 5 is 10,000. You're still 20,000 ahead. Okay, and then the others will either break even or make a smaller profit. So that's what the probability is on these. So that's what we're taking a look at here with the British pound. I wish someone would have told me that the old... I'm in a new segment. I'm sorry, folks. I'm really out of it, so bear with me. Let's take a look here at this, shut the front door, euro. I just had it here. What did it do? What happened to it? I know it's right in front of me, and I don't even see it. So, well, I must have taken it off. All right, I did. I must have taken it out for some reason. All right, hold on one sec. Wow, look at this cattle. Woo! This has been a good one. Look at that one. Just keep breaking down here. Okay, now let's get over here, pull that euro up so we can take a look at it. We also have a look at the dollar index. Since we're in the Ds, we'll just do that one first. Okay, you can see the dollar index is back up to that level. That's why it's selling off to everything. You know, see what I'm saying? So what we're looking at now, okay, here's the reverse of all the things we're looking at in the euro. We're going to do the euro in a minute, but this is the dollar index. Here was the pullback that we had here. That was the 382 pullback right there, folks. Okay, that was a 5-day pullback, stopped right there where it should have. That's when the pound and the euro topped 2 days ago. Now they're going back down. But look what we've got going now in the US dollar index. Now most people, you know, they look at the big picture. Yeah, well, I do too sometimes, but I'm just looking at an ABCD. That's as simple as it can be for me. Ooh, that almost rhymes. Okay, here's where we are. We had a nice run here. We went up from November. We're in 4 weeks into Thanksgiving, then down into the first week of December, and then there's where we are now. All we have to do is real simple. We make an ABCD pattern right here, and it tells us that we're going to get up to this level right here. There's the 1.618 at 109.74, and there's your number of the expansion. Remember, mathematics precedes geometry, so this is mathematics. This is geometry, so this is the number we want to go to. So we're going to put that in there right there. Hopefully, if we can get it. I don't think I can get it to move around. I never can anyway. Doesn't work for me. It works for everybody else. Anyway, this is that marking I want to try to show you, 109.74. So that's what we're watching. Now, there's a possibility this thing could just take off like a screaming eagle and never look back. If we look at this on the weekly, it looks like, yeah, we could easily get up to here, 111 if it goes crazy. But I think it's going to have a little trouble up here at this 110 level, 109.90 and 110. Just looking at the daily. Okay, now to verify that, all we have to do now is to go and look at the euro and see if we see the upside down version of what we're just looking at right here. I know this is like teaching you how to suck eggs, but by golly, sometimes it's better to learn this stuff. Now here's the euro. We're going to refresh this, so make sure we have everything in there that we need. Okay, now you can see the euro did not make a new low today where we have in the British pound, so that could be a possibility, the same thing that we're looking at in the euro. So all we're going to do now is we're going to do the same thing, upside down version of what it looks like here with the dollar versus the euro. Now the euro is the downside upside down version of that move. So let's just draw it in and you'll see, because it's telling you that the dollar is actually a little stronger, a little weaker than some people might think it would be. See, because the euro should have made a new low in here, but it didn't. Of course, the dollar didn't make it either high either, but that's what we're watching here. So if we get to 102, we're at 103 now. 1016 is what we're looking at for a potential number of this swing right here. All right, that will also validate this one right here. There's your ABCD pattern right here. Come right down there to this 102 level. So you want to have when we get below 102, that's what you want to be watching. So your limits are at 110 in the dollar index, 102 in the euro, and 102.90 in the British pound. Those are the ones that gives you the best. Now I'll bring up the chart for the Greenland dollar. That was a little political joke, folks. Very poor one, I might add. Let's take a look at the Australian dollar, because that's in the news a little bit. Is this the one they're trying to take over? No, it wasn't Australia. Where was it? Oh, it was taking over Mexico. Okay, here's where we are. Look at this, folks, where we are on a long-term daily. I'll refresh this, but something big is getting ready to happen here. See, we've been here for 3 weeks at the same level. So to verify this, what we need to do is go to the weekly and see where we are. You can see we're going back to where we were way back here. We've taken out that low, folks, of 2022. You see that? We've taken out that low, but we haven't collapsed yet. So this is another sign that maybe this thing is getting ready to turn. It's made new lows from 4 years ago, 3 years ago, but it hasn't collapsed. So usually when they make lows on the year, they go, whoo, south. This is holding up relatively well. So we've got to watch this. This is a big deal, because this will affect a lot of different things when the dollar weakens, the treasury bonds and all that stuff that we're watching. So we're going to take a break. Oh man, I can't do it.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day, Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.